Hello, everyone, and thank you for joining us today at Your Overseas Home webinar. So my name's Naya Damafio, and I'm one of the property consultants at Your Overseas Home. Today, I'm going to be chatting with Jean-Pierre Sarsabel from Chase Buchanan Wealth Management, and he's just going to be talking about the financial considerations when you're moving to France. It is so great to have so many of you here with us today, whether you're watching live or a bit later on demand. Once Jean-Pierre has shared his presentation, we will open the floor up to any questions. So if you do have any as we do go along, just please type in your questions in the questions tab on the right-hand side of your screen. We do hope to answer as many queries as we can today, but even if we don't, we'll get round to them. Even if we don't get round to all of them, just don't worry. Any unanswered questions will be forwarded to Jean-Pierre at the team at Chase Buchanan. Before you start your presentations, Jean, please can you just introduce yourself and what Chase Buchanan does? I think you're still on mute.
Apologies for that. Thanks, Naya, and thank you for everybody who's on the panel today. My name is Jean-Pierre Sarsabel. I'm a dual national. I was born in the UK from an English mother and from a French father, so I have dual nationality. I've been dealing with cross-border financial planning for quite a long time now, especially dealing with British who come over to France. Chase Buchanan is specialized in dealing with expatriates or impatriates from various countries. You'll see during my presentation, we have offices all around Europe and even in the US. What we find is interesting for the people that are listening is that we have a very long history of making things easy and helping people cross the channel with a portfolio of assets which are UK tax efficient and moving them across into EU efficient wrappers. And what I always say is, when in France, do as the French do, because the French don't like paying tax. So there's many ways that we can optimize the income tax, inheritance tax that may appear high in France, but actually are not. So if you don't mind, I'll just go through my presentation, which will be only 10 minutes, and then be very pleased to take some questions. Again, questions might have to be of generic, and they cannot be specific because we are governed by GDPR, global rules on data protection, so we cannot share any information of any specific details of people who are on the panel. So Chase Buchanan was established 15 years ago, is a company that is based in many countries in the EU. We operate under a MiFID license, which MiFID license is the, I hate acronyms, but it's a license which is in force since 2018 and allows us to passport our services into all of EU, and we are also regulated in the FCA, in the UK via the FCA, so which means that we can actually offer services to people on both sides of the channel. And so we are very highly regulated, as I just said. I'm personally regulated by the French authorities on top of being regulated by MiFID. For those who want to check our regulatory bodies, you can go onto the MiFID SciSec or ask me any questions. I'll give you numbers of our regulatory bodies. So we specialize in providing global finance solutions for expatriates around the world. And what is very important is that we are completely independent, in the sense that we are not tied to any of the companies that we work with. So we really try to figure out a holistic and personalized advice to our clients. Most of our competitors are not independent. And if you go to a high street private bank, they are not independent in the way that they will probably sell you most of the house products, and with big margins for them, and they won't really care about the client. So we put the client in the middle of the equation, and we provide what we like to call a jargon-free advice. And also, we are here for the long run. So most of our business comes from referrals. So obviously, ongoing support and reviews are very important to us. Our services: investments, financial planning, retirement planning, UK and international pension transfers. And very important, we have an American company, which is headed by Alex Ingram. A lot of our competitors stay away from US connected persons. We find that a lot of Americans want to migrate to Europe, and we have the possibility through our US company of dealing with them. And so if there are any Americans on the call, just reach out to me and I'll transfer you to the man in charge of our US company. Okay, very important on that page is UK and international pension transfers, because when you come to move to France or move to another EU country, but we're talking about France today, typically you have a lot of people who have UK pension pots, and our job is to make sure that we can get them out of these pots, transfer them into an HMRC compliant pot in the EU, which makes them very easy to use for life in Europe, whether it's retirement or just investments. Our offices. So there's one who's missing there. We've just opened an office in Dubai. So I look after France, Spain, Portugal is a big part of our business, the US, the United Kingdom, as I said earlier, Belgium, Cyprus, and Canada. Obviously Malta as well, because a lot of British people go to Malta. So I'm going to go into the details of, not the details, but give you a bit of an analysis of what are the tax essentials in France. There's a bit of a misconception that France is like a bit of a Robin Hood type country, that they take money from the rich, give it back to the poor. But in fact, I would say without any problem that France can be considered as a tax haven compared to the UK or other countries in Europe, if you structure your assets properly, and obviously that's what we know how to do. So in France, you have income tax, high income tax, real estate tax. So that's a real estate wealth tax, which I'll go into in a minute. Inheritance tax, I'll give you the main guidelines, because as you probably know, in France, you have forced heirship, which something is not present in the common law countries. In France, we have forced heirship, so you cannot disinherit your children or your wife if something was to happen to you. But there are many ways which you could legally bypass part of total the forced heirship. Also, the inheritance tax in France can be very, very high. We'll see in a minute, for families who are what we call recomposed, so who have children from previous relationships. They can go as high as 60%, and if we use a good vehicle, we can bring them down to almost nothing. So tax residency. I need to put my glasses. I apologize for that. So if you live in France for at least 6 months, 183 days in every given year, and are registered with your local commune, you're deemed resident in France for that given year. The difference between France and the UK, you're taxed as a foyer, meaning as a husband and wife, and you don't file 2 returns. You just file 1 return per family. So that gives you, in all, a better deal when it comes to filing a return. You actually pay less on income tax. Obviously, you have the infamous social contributions on income. These social contributions make you eligible for what France has, and that we call the social security, which is the equivalent of the NHS in the UK. But I would say that although it seems expensive, the healthcare system that we have in France is actually probably one of the best in the world, although the French don't realize it. So income tax, it's a scale rate, sliding scale rate, which can go up to 45% for higher earners. And also, there's a high income tax, which was supposed to be exceptional, but has been maintained. So if you are earning higher than over 250,000, again, that is as a foyer, as a household, you can be paying 3% on top of your income tax. So there are ways to mitigate that, and I can explain to you later on how we can do that. Real estate wealth tax. If you come from another country, you will be exempt, or you will have a holiday on real estate wealth tax for 5 years. The idea behind that is that France is very happy to have wealthy people coming to France, and they give you time to restructure your assets, property assets, in order to avoid paying the real estate wealth tax, because nobody likes paying that. The basic rule of thumb is that you have to be below 1.3 million total net value of your assets, property assets. Net value meaning you take out all the renovations you put in the house, loans, the mortgage and anything, and you have a net value at the beginning of the year, which gives you what your real estate wealth tax situation is, and you have a 30% discount on your main residence. So when you buy a property, you really have to bear that in mind. Again, I'm available for any questions concerning the wealth tax. Movable properties. So that is very, I have to put it, but it's very minimal. I mean, if you were to bring your Lamborghini or your Porsches or your Aston Martins, the French tax authorities could apply a capital gain tax on these, but usually it doesn't happen. But I have to mention that. So UK pension, when you're in France, deferred UK pension are not yet in drawdown, can be put into a more tax efficient UK overseas vehicle. That is what I would say is 30 to 40% of our business, because as I was saying in my introduction, it is very logical that you don't leave a UK pension pot in the UK in sterling whilst you're living in the EU and spending euros. So you can, through us, restructure these pensions and reorganize them into another wrapper, which we call QROPs or international SIPs. I had acronyms, sorry, but these are HMRC acronyms. So they're all qualified by the HMRC, and you have a list of approved schemes that you can see on their websites. Again, we work on an independent basis with most of them. And it's a very, very efficient way of moving your pot from one country to another. Inheritance tax, that's the big one. In France, as I was saying earlier, this inheritance tax slide is for children of the same bed, as we say in France. Awful word. So you can see it can go pretty high if you have quite a sizable estate. And if you have children from previous relationships or previous marriages, it can go up to 60%. Again, we have many ways to avoid paying such high amounts by just using the proper wrapper. And in the EU and in France in particular, there are some very efficient wrappers which, in case of death of one of the spouse, avoid you paying these amount of tax on inheritance, and you can include any dependents, i.e., like I was mentioning, children from previous relationship that you would like to avoid be paying 60% income tax. So tax on traditional portfolio, if you have equities, are subject since 2018, subject to a flat tax of 30%. So that's very straightforward. Difference between the buying price, selling price, flat tax of 30%. So it's whether you have bonds, stocks, and that is been implemented by Macron when he came into power in 2018, our President Macron. So basically what we like to say is that we are giving trusted advice, but we keep it simple. So I've been very simple in my presentation, and that's deliberate because I don't want to overcomplicate it. And now I'm available for your questions. So we are two looking after France, Malcolm and myself. And if you want to reach out, I'll leave that as we pick up the questions. My name is Jean-Pierre Sarsabal, and you have my details. Just send me an email. I'm not sure about the QR code, to be honest, but hopefully it works. But otherwise, just send me an email or whatever, and I'll be very reactive in my response. Now, the floor is over to you.
Thank you, Jean-Pierre, for all your insightful tips and advice. Now, we do have some time for some questions from the audience. So our first question is actually from Greg, and Greg's asked, would he need to pay tax in the UK and in France? If not, which would be the most beneficial country to opt for?
Is Greg...
I think you've muted.
Sorry, is Greg a UK or a French resident at this stage? Or maybe UK thinking of becoming a French resident? Basically, although Brexit has happened, there's a double tax treaty agreement which is still in place. You don't pay taxes in two countries. So if you're a French resident, you pay your taxes in France. If you're a UK resident, you pay taxes in the UK. If you have assets in the UK, when you're French residents, you're subject to income tax on your worldwide income, hence you pay them in France.
Okay. Thank you, Jean-Pierre. Peter's also asked, is there a difference for defined benefits pensions, for example, the local government?
Say again, sorry, can you...
Okay, I'll say that again. So is there a difference for defined benefits and pensions, within the local government?
In France?
Yeah. Sorry, Jean-Pierre, I think you've muted yourself again.
So the defined contribution in the UK is a private pension, which you contribute through your employer, and you get an annuity once you get on retirement, and that gets on top of the UK state pension. In France, you have the state pension, and you don't have defined benefits system in France. You just top up on your salary via your employer, and you get your retirement through the state and from top-ups, which are completely different to defined benefits. Defined benefits are really only in the UK.
Okay, thank you. I hope that answers the question, Peter. Williams also asked, can one transfer a UK personal pension after taking advantage of the UK 25% tax-free cash option before they become a French tax resident?
Yes, 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 3 times yes, and that is exactly what we will recommend to do.
Good.
Make sure you use that 20%, 25% tax-free drawdown while it's still feasible, because if there's a change in government in the UK, well, that might not be the case next year. So yes, 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 triple yes.
Lovely. I think this is slightly similar, but Martin's asked, will I lose my 25% tax-free lump sum if I now move the pension to the EU before converting to the drawdown?
Yes. Yes. So you're better off taking a 25% before you start any transfer.
Okay. So how would, and Greg's also asked, how would the tax status be affected if one person is living both in the UK and in France, if there is any visa restrictions?
So it depends on the number of days that they are in France. If they're 183 days in France, they are deemed to be tax resident for that year. So they will be paying taxes in France on their worldwide income. If there are 182 days in any given year in France, then they will be paying in the UK if they are in the UK for the remaining time of that given year.
Okay. Thanks, Jean-Pierre. We've also got a question from Christopher. Christopher's asked, can a UK government pension be transferred for tax purposes?
No. Government pension, state pension, we could, but the cost of the PI insurance that we would have to engage to do that is too high, and it would not be beneficial in terms of costs. So no, you can, and the state pension in the UK will not be taxable, as it will be taxable, will not be taxable in France. That's the only exception. So you get paid in the UK, you're not taxed in France.
Okay, that's great. So another question then would be, what tax implications, and sorry, this is asked from Scott. Scott's asked, what tax implications are there for the non-French residents with a second home in France?
So non-French residents will carry on having their non-French resident status and will pay their income tax wherever they are resident. The second home in France doesn't come into the equation in France. It will just be if they, for instance, rent it out, the income will be added to their income in the country of their residence.
Okay.
Whether it's the US, Denmark, England, France, Scotland, Great Britain, Northern Ireland, wherever.
Thank you. Jeremy asked the question, Jean, and this question is, on death, is there a threshold over which one pays French inheritance tax on property in France at all?
There is a threshold of 100,000 per children. So there's no inheritance tax between spouses in France. And there's 100,000 threshold with no tax per children. So if you have 3 children, each of them have a threshold of 100,000. So if you have a property, Mr. passes away, the wife gets 25%, the other 3 children get 25%, and 100,000 each have an exemption. 100,000 of that estate, it's becoming estate, of that property is exempt of inheritance tax. That's the threshold.
All right. Thank you, Jean, for clearing that up for us. We've got a question from Anne here. If one person sells their house after they move to France, will they be liable for paying tax on the sale of the UK house in France?
Yes, I would really be keen to speak to who asked the question, because I didn't hear very well.
Anne.
Okay, Anne. Yeah. Okay. This is a tricky one, and it's a very good question. This is the only I wouldn't say problem. It's the only case scenario where you could have double tax, but it depends on the years that you have the properties in France, the number of years you had the property in the UK, and there could be some double capital gains tax. But so there's a way that we could offset once against each other by a credit debit situation with the HMRC and the French equivalent. So complex, but yes, there could be an element of double taxation. That's the only part in the double tax treaty that carries a possibility of double tax.
All right. Thank you for answering that for Anne June. We've got another question from Adrian. Can someone run a gîte on a visitor long stay visa?
No, you have to apply for a working visa because it's deemed as being working. The easiest way to run a gîte in France is to set up what's called a sole trader business. So if there's some people living in France, they will be familiar with the concept. It's called auto-entrepreneur. Auto-entrepreneur, you do that online. It takes you 10 minutes to fill in the details. As long as you are below 80,000 euros of turnover, it's all automatic. You don't have to appoint an accountant, but you have to have a working visa.
All right. Thank you, Jean-Pierre. Okay, we've got a question from Michael. There may be some French pronunciation, so just excuse me if I get it wrong. But what is a carte séjour? Can it be obtained without being a resident in France? And if so, are there tax implications?
That's a very good question. No, you can't have a carte de séjour if you're not resident in France.
Okay, great.
You have to go through a process. If you become French resident, first you apply for a long-term stay visa, which is an equivalent to a carte de séjour. Then they renew that, and then after a couple of years they give you a carte de séjour. But you can't have a carte de séjour if you're not resident in France.
Lovely. I think we've got time for one last question.
Yes, I have time.
Just to squeeze it in. Yeah, thank you, Jean. So Christopher's asked, what are the tax implications on UK savings, such as premium bonds and ISAs, for example?
That is the question I was waiting for. Very good question.
Great.
So I need 2 minutes. If you are not French resident, as you probably know, premium bonds, ISAs are very tax friendly in the UK in the sense that there are no taxes at all. In France, they are considered as a normal investment and they carry out the flat tax, which I mentioned earlier. So I would suggest to anybody who's thinking about moving to get rid of the ISAs, premium bonds, have them in cash savings accounts, and we have the possibility of putting them in different wrapper in EU, in France, which has exactly the same tax advantages. So basically from an ISA or a cash ISA or premium bonds into cash, then into a different wrapper. But that is the question that is essential. Don't come in France without selling your ISA portfolio and being in a cash position. Really, I will emphasize on that again. Very good question.
Yeah, it's good to end it on that one. It seems that's one of the most important questions. So thank you for asking that. That is unfortunately all we have time for in today's session. So thank you, Jean-Pierre, once again for just sharing your knowledge. And thank you for all our listeners for joining us. We do strongly recommend that you do get in touch with Chase Buchanan directly if you've got any more questions or to discuss your requirements in detail. So we'll be in touch with their details very shortly. Before we do finish as well, I would like to invite all of you to just leave us a review on Trustpilot if you did find this webinar helpful. Thank you again, Jean-Pierre, and thank you everyone for tuning in. Happy property hunting.
Thank you, Na. Thank you for hosting. Thank you for all the listeners. I would say exactly as you, Na. Reach out because, like I said initially, what looks like a complex situation in France is actually not, and our job is to make it simpler and to help. So always don't hesitate to reach out.
Thank you once again.
Thank you.
Good afternoon, everyone. Bye.
Bye-bye.